Good afternoon and welcome to the market close report for Monday, the 13th of April. Well, the Aussie market did dip a touch today after coming back from two holiday shortened weeks, but only just. We've got the ASX 200 down around 34 points. That's a dip of around 0.4% to 8,926. And honestly, it could have been much worse today, considering that at the weekend, there was that marathon 21 hours worth of US-Iran talks, which were held. They were highly anticipated. They ended with no deal in place to end the war. Reports that the talks did go well, according to the United States, but they couldn't agree on some important details, namely around the plan for nuclear weapons in the future. Since then, things have deteriorated a bit, with President Trump this morning actually saying that he's going to start blockading the Strait of Hormuz from midnight our time, not allowing any ships to enter or leave Iran. So, of course, this jeopardizes what is already a fragile 2-week ceasefire, which is in place. We're about halfway through that now, and some uncertainty on whether or not, firstly, the current ceasefire will be seen through or extended, if these talks are going to resume soon, and whether or not the situation could potentially escalate from here. So we've already seen a response around markets globally. The price of oil at the time of recording this afternoon is up in the order of 7.5%. US futures also pointing to a decline of roughly 0.5% or a little more than that on the open later on this evening. But look, a few hours ago, things were looking a bit worse than that. We had oil prices down by around 9%. We had up 9% rather, and then we also had futures pointing to a heftier decline of around 1% on the open. Also, Friday night in the US, we had some data released on inflation, which confirmed that prices have obviously increased because of what has actually happened in Iran and around that region recently. This was the first CPI to actually capture the Middle East conflict because it was for the month of March. So CPI 3.3% over the year to March. That was the highest recorded in close to 2 years, but no big surprises there. And then there was also a read on consumer confidence, which sank to a record low, but this is just one survey from Michigan. Also, we've got to remember that it does follow our strongest weekly advance for the ASX 200 in 3.5 years. So last week, just over 4 days that we had over the holiday shortened week, our market rose 4.4%. So we've really done quite some strong work on the Aussie market over the opening handful of days that we've had in April to recoup a pretty healthy chunk of the declines we had in March. But, still a lot can change from here in markets. Across the sectors today, though, there were 3 sectors that did quite well. Energy, unsurprisingly, were the best, easily 2.1% higher. And that's because, of course, the oil price, which rose significantly. And then we had some defensive areas of the market, like the utilities, which are up 1/3, communication services, which are up about 1/5, and also consumer staples as a group actually did okay. They did fall as far as on the sector performance, but that was really because of one stock, which we'll get to in a moment. Outside of that, we did see declines of around 1.8% for tech, which has been certainly one of the hardest hit over the course of the year, but also industrials, consumer discretionary, real estate, they all fell. Now, there were winners on the market today, and many of these were actually companies that shot the lights out in March because of the conflict in and around Iran, but came off the boil a bit last week when there were some encouraging signs of that temporary 2-week ceasefire. But now with things escalating a bit, we're continuing to see some improvements now from oil, gas, LNG, coal miners, oil refiners. There were 7 of the 10 best today. That included New Hope, the coal miner, 4.6% higher. We also had Energy Group, Karoon Gas up in the order of 5%. And there were others like Beach, Viva Energy, Woodside and Santos as well. Telix Pharmaceuticals, 7.7% higher today. It announced a strategic partnership with a US biotech company called Regeneron. Now, Telix reckons it could be worth over $2 billion, that deal. And basically it means that they're going to co-develop and co-commercialize therapies. So they get to share in both cost, but also in profits as well. And Telix is expected to receive about $40 million up front for some of the work that will be done. And Monash IVF up around close to 16% today. It was the best on the All Ordinaries Index. Received a revised takeover offer from a group of investors led by Soul Patts and also Genesis businesses. So they're now offering 90 cents per share, up from the prior 80 cents, which was rejected in November last year by Monash. Now, reminder that Monash slumped by about 40% in 2025. It was the worst year since listing in 2014, and that was partly due to some significant operational issues, including 2 women being transferred incorrect embryos. Now, as far as the losers are concerned, there were still a number of them today. I mean, we had A2 Milk down about 13%. It was easily the worst. It makes a lion's share of its money, of course, from infant formula. Well, it updated the market today, saying that it's due to temporary product availability issues it's having in China, freight challenges because of the Middle East, and also low inventory levels. It now reckons it's going to generate lower revenues, worse margins, and also lower profits as well. EML Payments, which is a much smaller company, but it's down about 35%, 13-year low today as well. The global payments company has slashed its profit expectations by as much as 20% for the year. Blame this on 2 things. One is it's taking longer than expected to get a couple of projects up and running from some acquisitions. And secondly, trading in the Northern Hemisphere, which has been significantly below forecast recently, according to the company. Life360 down in the order of 8% today. A reminder that last Friday, the chief executive posted a lengthy LinkedIn post around AI, including layoffs, and then Bellevue Gold down in the order of around 4%. Now, of course, this week, the US-Iran situation is going to be front and center, certainly the big market mover. There'll be a couple of other things to watch, though, including an update on jobs growth, which will be out this Thursday. That's an important piece of the puzzle for the Reserve Bank ahead of its interest rate decision in about 3 weeks' time. And then we've got the US profit reporting season kicking off as well. Plenty of banks will be out with their results this week. Things will kick off tonight with Goldman Sachs and a few others as well. Looking forward to tomorrow, we've got some figures on consumer and business confidence. That always gets at least a bit of attention. We've also got some dividend payments from the likes of Pepper Money and also Chorus. And just a reminder that with daylight saving time ending, sadly here in Australia recently, the US market now shuts at 6 a.m. Sydney time rather than 7 a.m. Quickly looking currencies, the Aussie dollar is stronger against most today, up to about 70.4 US, but it's also strengthened against the euro and the Japanese yen. Well, that wraps things up. Have a great evening, everyone. Make sure to tune in tomorrow.